Hey everyone, welcome back to the channel. Today we're diving into Nike's fiscal Q1 2026 earnings, released September 30th, 2025. The stock surprised with better than expected results despite headwinds, and the reaction sets up a few interesting short-term scenarios. Let's break it down. Here are the headline metrics and what stood out. Nike reported revenue of $11.72 billion, which represents a 1% year-over-year increase, surprising many analysts who had expected a decline. On the profitability side, EPS came in at $0.49, a strong beat versus consensus estimates of around $0.27. Margins came under pressure. The gross margin fell to 42.2%, down about 320 basis points from prior, largely due to discounting, channel shifts, and tariff costs. Nike disclosed that tariffs will cost about $1.5 billion this fiscal year. That's materially higher than earlier estimates. Regionally, China remained a drag, with sales declining further, still the weakest market, contributing ongoing challenges. Interestingly, wholesale channels rebounded, helping offset weakness in Nike's direct business. Finally, Nike returned $714 million to shareholders this quarter. $591 million in dividends, up 6%, and $123 million in share buybacks, 1.8 million shares, under its existing repurchase program. Management emphasized their turnaround strategy, often called Win Now, is showing early traction, but warned the path won't be smooth or linear. Here's how the market took the news. In after-hours trading, Nike's shares climbed by around 3 to 4%, reflecting the earnings and revenue beats. Some reports noted the move was a bit choppy, but the overall tone was positive. Analysts are cautious, however. The beats were in part offset by margin compression and lingering headwinds. Some also flagged that the stock has underperformed year to date, so part of this move was catching up. A key concept for investors to keep in mind is post-earnings announcement drift, meaning when a company delivers a meaningful surprise, the stock often continues drifting in the direction of the surprise over several weeks. So, while the immediate reaction is bullish, much depends on how convincing the forward guidance and commentary are. Let's walk through a few plausible short-term scenarios for Nike's stock over the next few weeks to months. Scenario A. Momentum continues. Optimism rekindled. In this optimistic case, investors buy into the narrative that Nike's turnaround is real and sustainable. Upward revisions to analyst estimates, especially for Q2 and beyond, accelerate. The stock keeps rallying, aided by post-earnings drift and improved sentiment. Nike's ability to control margins, managing discounts, supply chain, tariffs, becomes a tailwind. Positive signs in China or stabilization there could further strengthen conviction. If this plays out, we could see a run into resistance levels and possibly retest prior highs, or within the upper range of its recent trading band. Scenario B. Guidance, shock, or skepticism kicks in. In a more cautious or negative scenario, Nike gives weak guidance for Q2, e.g. low single-digit revenue declines, further margin compression. Analysts take down forward estimates, and some turn more bearish. The initial post-earnings bump fades, or reverses as traders lock in gains. China remains a drag or worsens, raising questions about sustainability, macro or consumer weakness, e.g. inflation, discretionary spending pullback, triggers multiple contraction. Under that outcome, the stock could pull back to support levels, or even test lower levels in the near term. Scenario C. Mixed outcome. Range-bound trading. A middle ground possibility. Nike's guidance is cautious but not disastrous. Limited upside but no collapse. The stock trades sideways, oscillating between bullish optimism and macro skepticism. Any incremental positives, say wholesale strength, new product hype, get priced in, but margin pressure or China softness cap upside. The stock may test resistance zones and support zones, carving out a new range until the next catalyst. Here are some variables that will likely determine which scenario plays out. Management commentary and Q2 guidance. How conservative or aggressive they are will move the needle. Tariff exposure and cost inflation. The $1.5 billion tariff burden is non-trivial. Margin control and discounting. If Nike can defend margins, that boosts confidence. China and emerging markets. Continued weakness, there is a drag. Any stabilization would be a positive surprise. Analyst estimate revisions and target price updates. Upgrades/downgrades will influence sentiment. Macro, consumer discretionary environment. Nike is sensitive to consumer spending cycles. Post-earnings drift effect. If the market continues to digest the surprise gradually, there may be additional upside beyond the initial bump. One more thought. Given the meaningful earnings surprise, some portion of that may already be priced in, so future gains may require fresh catalysts rather than just re-ratings. To wrap up, Nike delivered a stronger than expected quarter, beating both revenue and EPS estimates, which gives its turnaround narrative renewed credibility. The stock popped on the news, but whether that strength holds depends largely on forward guidance, margin discipline, and execution in tougher markets, especially China. In the near term, we could see either continued momentum, a pullback, or a range-bound consolidation. If you liked this breakdown, please like, subscribe, and ring the bell. I'll be watching Nike's next moves and updating with new videos. Also leave a comment. Which scenario do you think is most likely? Thanks for watching, and see you next time.